Welcome back to the latest edition of Luma's Market Report. I'm Connor McKenna, Director at Luma, and as always, I'll be breaking down some of my key observations on the market for the first quarter of 2022. For today, we're going to be focusing on the challenges in the public markets this quarter, the impacts it had on deal activity, as well as some of the future outlook for the industry. As always, remember that you can click the link in the bio or visit our website at lumapartners.com to download the full report. Let's get into it. So it's been a very interesting start to the year. With several new exogenous challenges, Q1 2022 marked the worst quarter in public markets we've seen since the start of the pandemic. And technology stocks really felt the heat. The tech sell-off, which started in November as investors started to prepare for more tightening from the Federal Reserve, really accelerated in the new year. Inflation was the first shoe to drop, reaching a 40-year high in January and sending the NASDAQ to its worst month since March 2020. Then you had Russia invade Ukraine in February and add geopolitical unrest to the mix, further accelerating the challenges that this fragile market was already feeling. And as I mentioned, technology stocks were some of the most hit by this after they had gained significant ground throughout the entire pandemic. And AdTech and MarTech were no exception, with both indices trading down about 20% through the quarter, and a few stocks on both indices actually losing over half their value this quarter. One thing that we did see this quarter that's been a bit different, but's been tracking throughout the pandemic, is that AdTech and MarTech have been trading more in line from a valuation standpoint. If you go back a number of years, the MarTech and broader software markets tend to trade at a huge multiple above the AdTech sector. So call it around 10 times to around 1 times for the media sector. Today, we're seeing that the AdTech ecosystem has still been able to maintain multiples in line with what's happening with software, and they're trading much closer to parity at high single-digit multiples of revenue. While still down from a few months ago when things were much stronger, this does show that there's continued view of the AdTech ecosystem much closer to software, which is a big difference than we saw a number of years ago. How does this impact M&A? If there's one thing that M&A hates more than anything else, it's uncertainty, and we have uncertainty in spades right now. This is a natural occurrence with M&A, as M&A is built on conviction about the future, and when so many things are changing at once, it's natural that both buyers and sellers need to assess what the current situation is and whether some of these trends are permanent and lasting, or are they short-term glitches that they need to get around. And in general, that tends to slow down conversations or at least slow down closing of deals. What was pretty surprising this quarter was that deal transactions, just from the activity of number of deals, was actually quite strong. We had more deals than we had Q1 of 2021 and nearly as many as we had last quarter. Though what was different was there was a big drop in scaled transactions, which are deals over 100 million. And this was true across AdTech, MarTech, and digital content. Last quarter, we talked about the breadth and depth of this ecosystem, and really nothing has changed on that front. There's still breadth across a wide variety of transactions, a large MadTech middle class, with about 35 public companies still trading over $1 billion in market cap, despite the recent changes in valuations, as well as new entrants into the market around everyone becoming an ad network, and the just long arc of more shift towards consumer usage of digital channels and data proliferation, which ultimately are underlying this overall ecosystem. And on top of that, you've got the depth around strong financial performance, both growth and operating leverage, across many more businesses that have really matured in this space. And because of these factors, we ultimately believe these are the drivers that are going to continue to drive scaled M&A across the AdTech, MarTech, and digital content sector. And based on conversations we're having, these really haven't slowed down. It's just people are being more deliberate and thoughtful as they approach larger M&A opportunities. So that's it for us. We hope to see you again next quarter when we be unpacking what is hopefully a much stronger Q2. As always, remember to click the link in the bio or go to our website, lumapartners.com, to download the full report. I'm Connor McKenna, signing off.